Okay, so hello everyone. Welcome to the Yaspa hosted webinar on the evolution of AI in safer gambling as part of Safer Gambling Week. For those of you that don't know Yaspa, we are an entity that brings together the concept of identity and money to create innovative solutions in open banking. I'm head of product at Yaspa, and I've been working in open banking for the best part of 5 years. And I'm excited to say I'm joined by two absolute giants of the safer gambling community. And I've been lucky enough to work alongside Kasra and Simo on the development of Yaspa's safer gambling solutions. So, Simo, would you be so kind to say a few words about your background and your experience?
Sure. Hi, Max. Good to see you again. And hi, Kaz. And hello, everyone. So I'm Simo Dragicevic. I've been working in the gambling industry for about 15 years. So prior to that, I worked in financial services with Accenture and Barclays and a few others. But in 2010, I founded BetBuddy, which was a data analytics solution that used industry data, machine learning to try and detect at-risk play. So that was developed in 2010 and then eventually achieved good product market fit around about 2014-15 in the UK. We were eventually acquired by Playtech PLC, which is one of the largest suppliers in the industry. And I was there for about 4 years in different roles. I headed up AI in the latter part of that. Prior to that, I continued to sort of head up BetBuddy and a lot of the RG solutions and initiatives. And since leaving Playtech about 3 years ago, I've done a few things. I'm on the digital advisory panel of the Great British Gambling Commission, the regulator here. I've been a board member of the Responsible Gambling Council, RGC, based out of Canada for about 5 years. And I'm doing some other things, working on some new projects. One of those is called the Game Safety Institute, or GSI, and a couple of others. And of course, working with you, Max and Kaz at Yaspa. So yeah, that's me. And happy to be here.
Thank you, Simo. Kasra?
Yeah. Hi, everyone. Hi, Max. Hi, Simo. I'm Kaz. You can call me Kaz. I'm Director of Research at the UNLV's International Gaming Institute. So that's the University of Nevada, Las Vegas, for those who don't know the acronym. But yeah, I've been working in gambling or studying gambling for the past 20 years or so, actually. As you can tell by my accent, I'm not from Las Vegas, although I'm based here now and have been for the past 18 years. But I decided to move here because I was a pretty avid poker player, actually, and got interested in the gambling industry, did my master's education here, then worked in analytics for a few of the big hotel companies on the Strip before deciding to go back to UNLV to do my PhD in 2019. And it was really there I became really interested in how, the data that we collect across the industry could support harm prevention, safer gambling, responsible gambling, that kind of thing. And so my dissertation research was actually looking at how we can use payments data from payment service providers to support harm prevention and maybe identify markers of harm, which I'm sure we'll get into in a little bit. But yeah, since then, still researching how, payments, transaction data can be used to support harm prevention. Have also got a keen interest in artificial intelligence and machine learning applications, as well as also the ethical concerns and, governance concerns we might have around those technologies in the sector. So yeah, that's a very brief background, but I'm excited to be here today and talk about the cool work we're going to be doing with Yaspa.
Okay, perfect. Thank you both. So part of today's webinar, and you both have kind of complemented your backgrounds there perfectly. We want to draw on your expertise to firstly explore the history of machine learning. And I know, Simo, you touched on it a little bit there, but how machine learning has developed in regards to safer gambling, and specifically how the concept of taking operator data and using that data to train machine learning models has developed to identify patterns of emerging problem gambling. And then we'll try and move the conversation on to explore the opportunity that open banking data access in predominantly the UK, but it's also an emerging movement across Europe. And with the recent announcements in the US, it could be something that could take place there as well. How open banking could enable a truly single customer view for both operators, industries to better understand and manage their players, and possibly through machine learning, look at ways to enable earlier identification of emerging problematic behaviour. And then we'll wrap up the webinar to discuss the Innovate UK Government Award that Yaspa won and how we're working together on a research project to explore the quality of open banking data and the effectiveness of being able to determine patterns of emerging problem gambling. So the first question I was going to pose to you, Simo, was going to be just in terms of looking at the history of machine learning. In your own words, how has that evolved over time, and how has the concept of using operator data and the available data points that they have, how has that developed to identify problematic behavior?
Yeah, sure. So I think the practice of using the data and sort of statistical and machine learning techniques has been around for a while. There are some people who've been doing sort of interesting work in this space for 2 or 3 decades. I think of people like Tony and Tracy out of Focal Research out of Canada. But if we think about sort of solutions that have developed, I think the first real solution came out of Sweden. I think it was around about 2006. It was a company called PlayScan. And that was a spin out of one of the tech universities, Chalmers University, which there was a company called ICU Intelligence, and they developed it for the state lottery. It was a time in Europe when a lot of the markets were not sort of fully regulated and open in a sense that you had competition. They were run by state lotteries, and they developed it for Svenska Spel in Sweden, and they were using neural networks and measuring problem gambling through a gambling screen and trading models, and they developed a solution. And I guess they were probably the first to do that. I mean, BetBuddy came sort of 2009 onwards when we really started thinking about the solution. There were still a couple of others around. There's quite a big company now, FeatureSpace. You've probably heard of them. They were acquired by Visa recently. Dave Excel was dabbling in this space as well. He had a few gambling customers when FeatureSpace was one of the sort of main UK-based sort of analytics providers. But they went on to bigger and better things and focused on fraud and payments and e-commerce in general. It was too small for him eventually. But really it kind of evolved. And then, Necton came a year or two after BetBuddy. I think initially it was called Gamtrack, but then they changed that a few years later. And then probably, I can't remember when the likes of Mindway were founded, but maybe sort of 2015, 16, I'm guessing. But then it became a little bit more widespread. I still not really pervasive. It's quite interesting. The technique of using data and machine learning is quite widespread, but you've had a lot of the mid and large size operators try and develop it internally. There was always a reluctance to hand over player data to third parties, and I think that still exists to some extent today. So it's evolved. It's widely used. We still don't have lots of vendors. I think it demonstrates it's quite hard to build a sort of a profitable business in this space, just because it is quite complex and niche, and the operators have had a lot of time to play around with it. It's only the last few years that it's become sort of more of a regulatory requirement. Again, still quite vague, the requirements. They don't specifically say you have to use machine learning and this data, more like you need to have mechanisms in place and processes. But obviously machine learning lends itself well to this type of a problem because of the scalability and the ability to do the calculations and find the patterns. So yeah, it's kind of evolved at a reasonably slow pace, but it's been around for a while. And it's sort of interesting where we are today that, there are a few players still, a few have been acquired. Better Collective, the largest affiliate group, they acquired Mindway. OpenBet recently acquired Necton. Obviously, Playtech acquired BetBuddy. So it's an interesting space. You have some of the commercial analytics providers trying to dabble in this space as well, but I've always felt they've struggled to sort of really get the deep specialism because their bread and butter comes from the more traditional applications of sort of data analytics and machine learning in the gambling industry. You know, there's more of a requirement, you could say, from the industry for those services than on the safer gambling side. So it's sort of been an interesting journey over the last, nearly 2 decades, I think, since it really surfaced.
Great, that was a really comprehensive overview. So thank you, Simo. And maybe to you, Kaz, in terms of what Simo touched on there with the number of potential operators enabling these types of machine learning techniques and providing those services to gambling companies, do you think that creates a space where there's a lack of standards across how all of these different suppliers of this type of technology have created their own machine learning capabilities and trained those models in different ways, and potentially then are producing different outcomes for operators in assessing harm?
Yeah. No, that was a really great brief on the history of player protection, or data-driven player protection. Thanks, Simo. I think, Max, I think the crux of the issue probably is that we're not studying something that is easily defined. If you look at the progression of other machine learning applications or AI, algorithmic decision making, or whatever it might be, there's usually a very clear definition of what the machine learning algorithm is trying to predict or define. Let's take all the advances in image recognition. We've had huge advancements in image recognition, and that's because we have a lot of ground truths, is what we call it in the domain. We know, what an image of a cat looks like. We know what an image of a dog looks like. We know what an image of a lamppost or other street furniture looks like. And that makes it very kind of, I'm going to say, easier to train the models because we have the ground truths. Unfortunately, in terms of safer gambling, we don't have a whole data set of ground truths of what a person with a gambling addiction looks like in terms of their behavioral data. That makes it quite challenging then to create these algorithms and models to define what that is, because we don't really know. And obviously, of a lot of these companies that Simo has spoken about, they all have their different methodologies for how they're defining risk. Playtech, BetBuddy have been known for predominantly using voluntary self-exclusion. I think other companies as well use that, account closures. Other companies have their own screening instrument they might use. But there's no real consensus in terms of what the best method is for defining that risk. So I think that's maybe the crux of the challenge in terms of the diverse array of methodologies and outcomes that we're seeing. I think hopefully that answers the question.
No, it definitely does. And I think it draws me on to an academic study that I have found particularly interesting as I've been trying to research safer gambling and machine learning approaches so far, and what it is to define a problem gambler. And the behavioral insights team back in 2021 did a study with Monzo data and HSBC data that effectively took a subset of bank data which had gambling transactions in it. And it was the first time really in the UK that there was the opportunity to assess the quality of transaction data, but also to use it in the sense of what does problematic gambling look like if we can see the single customer view and we can see someone depositing across a number of operators. And they came up with a view that a more moderate problem gambler perhaps deposits on at least 4 or more operators, but someone who's potentially on the more severe side of being a problem gambler will deposit on at least 6 or more as a typical behavior. So we know that kind of thing can be seen in bank and transaction data, but with the way the current approach has developed and looking at the operator data and the data points that they have available, obviously, in my mind anyway, it would be difficult for any machine learning technique to truly understand someone if they can only partially see a subset of that person's gambling activity. Because even a more moderate player might typically be, as I said, gambling on 4 sites. So does that impact how the machine learning model process would work, in the sense of if you can only see a portion of the behavior.
Yeah, absolutely. I think that's another crux of the issue. Not only the difficulty in defining problematic or risky behavior, but yeah, also that a lot of these operators are operating these algorithms in a very confined space, which has a constrained view perhaps of some customer activity. And I think that Monzo study, and actually some recent research we've done with some banking data as well, has found that, on average, the typical gambler has maybe 2-3 accounts at different online gambling companies. And the most involved gamblers, the people that you probably are worried about in terms of this context, have up to maybe 6 operator accounts. So if you are, trying to define risk at just 1 out of 6, that might be very difficult. You might not really be identifying that person as well as you could be. So yeah, I think it's that's a real issue, and it's something that I think we're talking about today, how open banking perhaps provides one tool that can help address that limitation. So yeah.
Very good. And Simo, before I move on to open banking, are there any kind of final remarks on the current approach and where we've got to as an industry with operator data and machine learning today?
Yeah, no, I agree with everything that's been said there by Kaz. It's interesting. I think, we may get into this, but what operators need to do is be clear about sort of what their algorithms are trying to flag and what they're not. And, what we used to do, and I guess I haven't been with Playtech and BetBuddy for several years, but I believe they're still using a similar approach, is, we would take, say, voluntary self-exclusion, but we would take a real slither of those. We'd probably disregard 90% of the self-exclusions because they happen quite quickly and you don't get enough data around the players. But for those players who have been on your side for a reasonable amount of time, elapsed time, but also transactions and play sessions, you can build a good picture of their behavior with you. And, notwithstanding they may have 2 or 3 or maybe 5 or 6 other accounts, there is an ability to sort of build a profile and model that and see whether that, behavior is trending towards more problematic play. So I feel there's still value in the approach, as long as you're clear about what you're trying to do and what subset of players you're covering. You need to be really clear about the blind spots of these algorithms, and they will have a few. So yeah, no, for sure you can't capture all of the play, but for that subset of players who are regular players on your site or in your casino, then I think there's still useful approaches. And the point Kaz made about the definition, the ground truth, what are you trying to sort of predict or classify is really a tough one. And it's hard. So, to do this really well, if you're a medium or large size operator with, lots of different gambling verticals and different types of players, you shouldn't really rely on just one algorithm. It's just too diverse a population. So it becomes quite complex to do this really well.
Thank you. So to segue over into looking into kind of how we potentially complement what's there already in terms of how that approach and using machine learning on operator data is developed. And as you say, there are ways in which that approach can really help and support operators to take action and identify problematic behaviors. And it's effective, it's working, and it's definitely something that operators are having value in, whether that's using a third party to provide those services or whether they build those machine learning models, techniques in-house. From Yaspa's perspective as an open banking company, and maybe for a bit of information on open banking for people that aren't aware of the movement and how it's taken hold in the UK. So open banking and the kind of more early or the more recent concept of open banking in the UK started in 2017. And that was on the back of the Competition and Market Authority in the UK, which was a government-backed entity. effectively launching a mandate on the 9 largest banks in the UK. And they effectively told those banks to enable their customers to have increased data access rights. So that effectively enabled 2 key use cases to emerge. One of those was the account side of open banking. So that was permitting users to enable third-party providers to have access to their account details, their account name, direct debit, standing orders, and their transaction history. And that could be up to 12 months historical, and then continued monitoring of that account for a period of 90 days, and then to be extended upon the request of the user. And the other key emerging use case from the order was the enablement of payments to be initiated by third parties that were regulated by the Financial Conduct Authority. So that movement started to take hold in 2017. And I think it's fair to say, as someone who's been in the industry for that period of time, it's been a relatively slow burner in the sense of the adoption in the early years was quite slow. But we've actually got to a point now in the UK where we now have over 11 million active participants of open banking across the account side and the payment side of open banking, which actually shows kind of great growth across the sector and the awareness from users that there's this ability. But it also shows that there are emerging use cases that have been built by businesses to put open banking opportunities in front of users, to enable them to access this technology to have some sort of economic or social benefit to their lives. So an example of that is quite a commonly adopted use case in the early stages of open banking has been affordability checks. So this has been a key use case for a proportion of people in the UK market that have been previously either invisible or they've had very thin files from credit bureaus, which might have meant that previously it would have been impossible for them or very difficult for them to access credit facilities like loans or mortgages or credit cards, because credit bureaus just didn't have any data on them. And that might be because they were young or because they hadn't previously ever needed to take out a credit facility. So one of the great early adoptions of open banking has been to look at using transaction data to analyze people's affordability and see if they have a regular income, to enable that access to credit on a more widely adopted basis. And to touch on those data points and to bring it back to the gambling industry and safer gambling in particular, I mentioned the behavioral insights research back in 2021, and Kaz, I know you've been doing a more recent piece of research on that. But to me, it does feel like there is a real opportunity here to look in more detail at transaction data in particular and look at the opportunity that presents to the operators, to the industry, to the regulators. So that opens up possibilities to look at things like how much money are people spending across a number of operators, how many deposits has someone placed in terms of the frequency of those deposits, and at what time are they making those deposits across operators, which provides a kind of holistic single customer view of how someone is transacting and behaving on a pan-operator basis. But then, and equally as importantly, the kind of financial view of an individual. So being able to balance the view of how someone is spending their money on gambling against their actual levels of income and affordability around being able to detect a proportion of spend on gambling, and even being able to detect things like, has someone recently lost their job, because we can detect the fact that there's no longer a recurring salary payment at the end of the month. That's what we've been trying to explore as part of our Innovate UK grant, building on open banking and some of that early momentum that's been had in the UK around looking at affordability, but trying to go that one step further. And Kaz, maybe to you first, because I know this is your background around looking at kind of payments data and transaction data. But what opportunities do you think there are in open banking in the UK to look at this in more detail and look at the possibility of creating a single customer view?
Yeah. Yeah, and I think to like summarize what's perhaps most exciting or provides the most potential is that what it's potentially providing is a objective measure of gambling harm. Now, if we take a step back and look at, what are the harms that could be suffered from gambling, there's a wide variety, and there's been a lot of research done on trying to conceptualize what those are. They've been kind of bucketed into different categories like psychological harms, physical health, mental health, relationship disruptions, work relationship disruptions. Category of financial harms appears to be particularly important as it acts as a trigger. It's often the first kind of harm that people experience. Maybe they experience a loss from gambling, and therefore it could act as a trigger to all of these subsequent, also really bad harms as well, like mental health issues, relationship disruptions, that kind of thing. What open banking or bank transaction data provides is potentially an objective measure of financial harm, which is something that's been really lacking. If we go back to our conversation about how we define risky gambling or problematic gambling, currently we're looking at, these markers of harm on tracking data or other digital mechanisms. We can track that behavior. And it's usually, the frequency of play, like how often people are playing, their intensity of their play, how much they're playing. They're all of these kind of gambling behaviors that we're trying to correlate with harm, but we don't necessarily know that. So that's why we go into, okay, well, of these people that look this way in terms of their behavior data, let's ask them, subjectively speaking, like what they think their gambling looks like. So that's what we do with like the PGSI, the Problem Gambling Severity Index, and then we link that data with the objective data, but then that's subjective. So that's a bit of a limitation. So yeah, just to summarize, I guess, like, this is really important because this transaction data potentially provides an objective view of someone's financial harm or their experience of financial harm, which I think is really quite powerful. You want in research or any models like this to use objective data if possible. So this perhaps gives us that objective data that we can use to more powerfully and accurately train these models.
Yeah, and that's really interesting, the point around kind of the objectivity of the transaction data. And it does go back to that kind of 2021 study where they kind of made this assessment of this proportion of spend is too much potentially, or it indicates harm, or this is a moderate proportion of spend. So I think there is that kind of objectivity, because you can see kind of qualitatively and quantitatively from the data the kind of total levels of someone's activity. But in the context of assessing kind of transaction data, I think in machine learning, there's still this need to kind of weight transaction data in some way, as opposed to someone determining risk scores based on what they think determines a level of harm. And I think that's one of the things we're trying to do at Yaspa with this research, is to look at how do we kind of baseline the transaction data and the objectivity of the data, but still try and tie that to something, as opposed to kind of creating our own risk scoring based on what we perceive to be risky behavior.
It's interesting, the sort of discussion around harms. I kind of agree that if you look at all of the harms, the negative financial consequences are probably the biggest negative impact, from gambling and contributions to harms. I wouldn't say it's the only, but it probably is. When you think about it, especially Kaz's point about sort of triggering others. So that's important, and you get that view through open banking if you have access to the right accounts. Now, interestingly as well, what you don't get is the sort of the more intricate behaviors that you could model with operator data. So, the stakes, the wins, the losses, the games they play, etc. Now, they're all important, but in my experience over the years, every time we've built these models, the data around the wallet behavior tends to be quite powerful in terms of sort of the predictive nature of those features and behaviors. So So even though you don't see all of that, I think what you do see is quite relevant in terms of, frequency and sort of deposit behavior. And then you obviously get the kind of the really powerful views that you see it across different operators. So I think it's important to really sort of put that in the context that it's quite important. It's, as with all of these things, it's not perfect, but actually it covers a big spectrum of what you're trying to sort of track and measure.
We also get like spending on other things as well, right? Which could be interesting to look at, like someone's discretionary spend total, right? And, are they spending disproportionately more on gambling than someone else with that kind of discretionary spend level? So I think that's a kind of interesting area to look at as well, because it's like, okay, yeah, someone's got discretionary money, what they decide to spend it on. So someone might be like, oh, I spend 80% of my discretionary spend on gambling. Someone else could have a much lower discretionary spend, and, that portion is much more significant or whatever. So I think that's going to be interesting as well. And then you can do that with the transaction data, right? Because you're seeing. So I think that view into other spending categories is also going to be quite powerful.
I think so, and I think the ability to then link that back to the source of income. So, for example, even if it is it's this proportion of income spent on gambling, what is that income? And do you, for example, include things that most people in the UK get around child benefit? Does that count as something that you weight proportionally against your overall level of income in terms of spend? So I think there's a lot of decisions to be made in terms of properly understanding the data, and where, in the case of source of funds, for example, how you might weight the overall level of income against proportion of spend to produce an outcome that's reliable and not potentially going to be misleading.
For sure.
Great. And then maybe just before we move on to the kind of final topic, was just in terms of kind of spinning it back to the current approach of using operator data, Simo, maybe in terms of kind of enriching the current machine learning approach and how operators are currently either doing that themselves in-house or working with third parties. What's the opportunity here for kind of both of these things to coexist together and complement each other over time?
I think there's a few opportunities. I really like the idea of payment providers being a source of objective data that operators could use for their own sort of internal systems. Companies have invested significant amounts in developing solutions, algorithms, processes, etc. And we know where the blind spots are. We've discussed that. So if you can provide richer data around individuals that can sort of feed into those models, I think that's a really sort of powerful opportunity. If I was an operator, I'd be very interested in sort of getting access to that data, because ultimately you want your algorithms to be as accurate as they can be. That's ultimately how you test, whether they're working. There's a broader discussion around what you do with the outputs and how effective you are at moderating play and changing behaviors. But ultimately, you want to be able to pick the right players as confidently as you can, so that you can confidently broaden the net and intervene in the confidence that you're likely to be picking the right players. So I do think there's a really good opportunity there for this data to complement existing investments in sort of RG tools, for sure.
I think another as well opportunity or like benefit this provides is if we talk about the logistical challenges of doing a more holistic view or single customer view. If you were to do it without payments or transaction or some other party that collects that kind of information, you'd probably have to try and somehow get the operator data individually and then create some kind of data lake that like brings all of this information together. And not only is that challenging from kind of a logistical or operational standpoint, it also brings to question kind of governance questions, like who's responsible for doing that? Then once you've got this data, who's going to be in charge of managing that data and who has access? And those are very tricky questions. So aside from all the potential power in terms of prediction and supporting safer gambling, I think there's another really important benefit that open banking provides, and it is solving this logistical challenge of creating a single customer view in terms of operationally and in terms of governance. So I think that's another important benefit the technology actually provides.
I was at a conference in Prague a week ago, a responsible gambling conference, and this came up. It was very topical. This idea that the cost and complexity of bringing all these sort of billions of data points together on a daily basis, does it, is the cost benefit analysis showing that it's worth doing? There's all the data privacy, there's data security, and other interesting challenges like if let's imagine Kaz, they found a way to operate it and govern it and it worked. Where's the incentive to invest in your sort of internal systems and processes? Because I would be probably, if I was an operator, thinking, well, actually, this is going to solve my problems for me because it's got everything in there and it's being run on a daily basis. So you're right. There are a lot of complexities around these types of solutions, and until you get really into the detail and start exploring them, because on the surface, it's the classic silver bullet that solves all issues, but this one is really complex, I think, to implement. If you compare it to some of the other sort of or multi-operator tools like central self-exclusion systems, they're really conceptually and technically very simple compared to something like a single customer view, which combines all that data. So sorry, Max, to interrupt, but just wanted to emphasize
no.
points
So,
Kaz made.
Yeah. And I suppose the only thing I was going to add to it was the element of this being a consent-driven process from the user's perspective. So that obviously I think is important because operator data is consent-driven in a way, in the sense of this is a person consenting to play on that particular operator. They've signed up, they've chosen to share certain data points around their home address, their name, their email address, their phone number, and then they know, or at least probably would be aware, that everything they do on that site is tracked because of how modern technology has evolved. So they will have some concept that the operator will understand what they're doing, and certainly will understand the operator knows how much money they've deposited, for example.
Yeah. You want to use like existing frameworks that have years, or not even frameworks, existing technologies and industries that have years and years of practicing this, right? Rather than kind of creating something new necessarily. It reminds me actually of some work I did while I was researching my dissertation on payments. I found it interesting that, in the land-based sector, the conversation around cashless has been interesting to me, because what's happened is, like, the gambling sector has said that they need to regulate cashless very kind of stringently. And what it's created is like these exotic payment solutions in the land-based sector that try to create a cashless experience for the customer that isn't Apple Pay, or that isn't something they're used to. And I'm not sure if that kind of regulatory activity has got it right in that scenario, because wouldn't you want to leverage kind of robust payments infrastructure that maybe people are used to and stuff? Yes, maybe it creates friction, so there would have to be some questions asked in terms of how do you offset the frictionless experience that an Apple Pay provides or whatever. But I'm not sure if enough conversations were had in terms of, as Simo said, a cost-benefit analysis in terms of creating these very exotic cashless payment solutions in the land-based sector, where they could have just maybe leveraged very robust technologies that have years and years of kind of, tried and tested practice. So yeah, just reminded me of that a little bit.
Yeah, and that's where some of the wider conversations I've been having as part of the kind of the development of our payment flow and the consent flow to collect this data and present the benefits of this to the user are kind of started initially on the concept of safer gambling and trying to position it in that way to users. But what we were finding is that there's actually a relatively negative reaction to quite a lot of the messaging in safer gambling, certainly when we were trying to position it as part of the payment flow. And actually, the approach we're now testing with operators is to dilute the kind of the safer gambling type terminology and just normalize the language with the theme of positive play. So promoting the benefits of consenting and sharing the data and making a payment through Yaspa to the users so they can understand, okay, well, this might actually improve my player experience and my lifetime value with me on the operator side, because the operator doesn't need to take intervention with me potentially, or the operator understands that actually this might be a kind of reasonable level of activity for me to be displaying without needing to stop me from continuing to gamble and take deposits. So I think there's a lot in there from the kind of user perspective around that control and the choice, but also from an operator's benefits. It's potentially a way for them to look at how they manage their portfolio of customers better through their life cycle. Cool. So I'm conscious of time, so we'll try and look to wrap this up and maybe just to highlight some of the work that we've been doing as part of the Innovate UK Government Award. So for wider context, Yaspa submitted an application back at the end of last year, and we were awarded a UK Government Award in July of this year, effectively with Innovate UK sponsoring Yaspa for the development of using transaction data and building a machine learning model to look at identifying earlier patterns of problem gambling from bank transaction data made available through open banking. And so far, we've done quite a lot of usability testing on the messaging, as I just mentioned. And we've also built an early prototype that we're going to go live with in early January with an operator to collect and then look to train a machine learning model on that data. One of the things you've been helping me with, Simo, has been to develop an idea of 50 new financial markers of harm from transaction data to look at and assess the quality of in terms of their effectiveness of identifying harm. And then Kaz, part of kind of the work that we're looking to do together as we go into next year is to undertake more of an academic study on the effectiveness and the quality of using transaction data made available for open banking, and then also the approach of using machine learning models on that data to look at identifying more earlier in a player's life cycle problematic behavior as it's starting to emerge. So I suppose to both of you, just in terms of the Innovate project and why you guys are both involved, maybe Kaz, with you first, what kind of excites you about this from a research perspective?
Yeah. No, I'm super excited about it. Not only, obviously it touches on all of my personal research interests really nicely, transaction data, AI, machine learning. But I think academically speaking, it's interesting, and I spoke to a few colleagues about this same kind of discourse that's happening in terms of like research funding and grants. It used to be that you didn't, maybe the industry collaborations or research fueling industry applications wasn't really attractive, or maybe was frowned upon in some instances. But now you look at, the big NSF grants for across fields for cancer and everything from medicine to environmental applications and all of these things. The number one thing a lot of these big grant entities are looking for is commercial application. How is this going to help the real world? How is it actually going to create an impact beyond just getting published in a journal? So I'm really excited that we're able to support this initiative in terms of that research. And I think, as we've just spoken about, the actual commercial impact, the actual impact for people's lives, for the industry is quite evident. So yeah, I'm just excited to be working on something that actually has real world application and benefit.
Awesome. We're definitely excited to have you on board, Kaz. So thank you. And then Simo, just in terms of maybe that kind of broader view of the UKGC and the single customer view, that seems to be something that's coming up time and time again more recently, this concept of single customer view. And the UKGC did initially look at open banking and possibility of using open banking for affordability checks, but have recently pivoted away from that. This specific project, do you think this enables a kind of new opportunity for the industry and the regulator to kind of reconsider open banking as a way to enable the single customer view?
Yeah, interesting question, because I guess we're still at the early stages of how this is evolving. And, there were probably some similarities with self-exclusion. That was something that was predominantly done within the operator. Then we evolved with things like central self-exclusion, and then we've evolved with things like blocking software. So you get sort of the same outcome, but sort of complementary sort of solutions that are helping, fill the gaps where one specific approach doesn't quite cover everything. And I kind of feel it could work out that way with single customer view financial risk assessments, because yeah, for sure, the Gambling Commission is looking at is initiated the pilot, with credit reference agencies. But we know that they don't cover all of the population. For example, we know that some of the data, obviously they have very rich and very interesting data around individuals, but won't necessarily have the level of depth and up-to-date data that, say, open banking has. So it's kind of, if you sort of think about it, the operator will have his or her view, which will be good. And then you sort of plug in this sort of credit reference agency view, which is interesting and adds a layer. Then you can really add, as we've discussed, some really powerful insights with open banking. So, if I was a betting man, it's hard to sort of do it all at the same time. I think, it's sort of classic regulators sort of doing the right approach as a regulator, which is like testing and learning and trialing and trying to sort of gather sort of operational real world evidence before they make sort of big decisions. And I suspect that they'll learn a lot from the current pilot, and that will also open a lot of questions around sort of where the successes were, where the weaknesses were. And that could then be a really good opportunity to take a much deeper look at, open bank and how that can add that layer of insight and protection that, the other solutions may not have. So, it's not, it's probably frustrating that for some who are developing, innovative solutions and ideas like Yaspa and others, that it's not there today. But, this is a tech trend, open banking, that's only going to become more pervasive. There'll be more uptake, and the solutions, the stuff that Yaspa are doing today on this project, roll forward 2 or 3 years, it's going to be much better, more powerful. You're going to have more experience. So you can definitely see a world where they're working together and they're all adding value. So typically with sort of RG initiatives, you've got to be reasonably patient. Unfortunately, they take several years to kind of evolve and become fully operational. But I don't see this going away.
Brilliant. That was a great summary, I think, to close it out, Simo. So thank you. And I guess I want to thank you both for participating in the webinar today, and also for your wider support on the kind of the Innovate UK project and helping Yaspa to develop this idea and solution over the last 6 months. And I guess from a personal perspective, I mentioned at the start, I've been in open banking for like 4 or 5 years. And actually the kind of the connectivity side and the kind of some of the early use cases that have emerged in open banking around like account verification and the payments, they seem quite sort of basic solutions now when we've got into kind of the detail of this as such a niche use case and concept. But it's also for me anyway, exactly why open banking was enabled in the UK to create kind of real value add, both from an economic, but more importantly, social perspective in the UK. So I'm really excited about continuing to work with you both.
Likewise.
Likewise, thanks for having
Brilliant.
us on. You know me, love chewing the fat and talking about these things. So it's cool.
Thanks, guys.